Today we're going to be talking about the first hour. Stay tuned, traders. We'll be right back. Good day, traders. Stacey Burke from Stacey Burke Trading. It's Friday, end of the week, and just before we get started, I'd like to say thank you to everybody for a ton of great feedback, a lot of questions, and again, I apologize. Just the volume of emails and comments and questions. I'm trying to answer everybody's question. If I don't answer it specifically, I don't want you to feel that I haven't responded. I'll definitely try to address all of that in the content and on the videos. But before we head into today's video, again, I'd like you to just hit the like button one more time for me. Again, that's made a big difference in getting our videos out to a lot of new subscribers. And it's amazing the amount of feedback from new people, how they feel that this content has helped them. And so again, today, simplifying some things, going to answer some questions, and we're going to go over some examples on the British pound as well today, as well as gold. Just reviewing the first hour, day trading the open. I've talked about this. Gold, obviously, a lot of people have asked a lot of questions about their brokers, the spreads, the volatility. I just want to emphasize a couple things about gold. There is a lot more movement in gold, but again, volatility is always controllable and manageable by your position sizing, your stop loss, all that sort of thing. So an instrument's volatility can be managed the same as any instrument. So you adjust your position size to control your risk, but again, I mentioned in the first few videos, study the charts first, watch. You're going to see some great examples on gold today. We'll go over the 1 minute chart, and I want to talk about the open, the first hour in that 12 candle window. We're going to go over the British pound and talk about the differences in the British pound versus gold in terms of the movement and time that it takes to make those movements, and 1 minute versus the 15-minute chart on the pound as compared to gold. The timing window is what's critical. If I can emphasize one thing to everybody, without a doubt, stick to the timing window. And now I know that there are trades outside of the timing window, and I've emphasized this in the past. If you are trading in the gap times, you want to be trading at the high or at the low, or in a move that's following through with the original trend. So for example, on gold yesterday, you know, they're making new highs, following that trend, but you want to be careful you're not getting caught up high for the reversal or down low for the reversal, or again, just getting caught inside. And again, we'll talk about major round numbers, the importance of 50s and zeros. But my critical timing window for me has kept me out of a lot of whipsaws and, you know, false moves, choppy markets where they consolidate volume inside, and still from time to time there's things that look really good, or I may have missed a move, but inevitably every single time when we get to the 12 candle window, there is always an ideal setup. So one of the lessons that I've had to learn the hard way is that when I get FOMO or I want to trade and be at the screen all the time, I get caught into some choppy stuff. I might get lucky sometimes and scalp some pips, but inevitably you end up getting your worst beat ups when you're outside of your rules and you don't follow your process. And that's critical about having some kind of plan that you're going to follow each and every day, that you can duplicate, that you can reproduce the results with, and then on as well scale it, scalable trade setups. So again, emphasizing the important thing that I try to really focus on, and again, you have bad days and you lose focus, you lose touch with the market, but I always ask myself a question: is the trade I'm about to take, or that I'm looking for right now, is that a scalable trade setup? So for example, on gold yesterday, we had a couple of perfect opportunities for scalable trade setups, and we had one this morning. We had two this morning on gold. Three actually, one pre-market, one at the open, and one after the first hour. So we're going to talk about the first hour and understanding too this 12 candle window, 3-hour window. That first hour typically is the pre-market hour. So outside of that, there's some pre-market movement, but that first hour, without a doubt, lays the foundation before we head into the equity markets, and specifically for London and New York. Asia's a little bit different because as the day starts, Asia starts to move and make a new high, make a new low for the day's boundaries to be set. It may trigger a previous day's high or low. But that still applies in that first 15 to 30 minutes will often give us a high or a low. So a move, for example, this morning in gold, we have a blow off, a trend trade. We had a false W prior to the market opening, and again, understanding that the 50s and zeros are critical, because the double zero boxes for the pound and gold especially, they love to trade off of and inside of those numbers. So important not to get caught taking a low probability setup, even though it looks technically like a good setup, if you're trading into the numbers. So that first 15 to 30 minutes will often make a high and a low. Or if they are already in movement, so if the market's going down, at some point in that 15 to 30 minutes, maybe even into that third 15-minute candle, we may, for example, like this morning in gold, we had a little W. They went up into zero and rolled over. They came through 50. So we're into this 15 to 30 minute time frame now, and the market starts to work around 25. So when the markets come down like this, and we've taken out yesterday's low, and we're into our third 15-minute candle, this, again, the first hour we're down. So what I'm looking for now, the market's already down, is the market to put a low of the day in place. So low of the day typically will end up looking like a W. Or we can get a 1, 2, 3. We can get a 1, 2, 3. It can be all different types of scenarios, but when the market is in that first hour, it will give us a high and a low. In the first 15 minutes, the market can go up in 7.5 minutes and come down in 7.5 minutes and give us a high and a low right off the bat in the first 15 minutes. Then pull inside and trade back and forth. So we have our high and our low, and then when we get to our equity hour, that's when we're looking for the market to either hit stops and reverse, or break out and trend. So again, three things that markets do: they break out, they pull back, and they trend. They break out, they pull back, and they reverse. We saw that last night in the US Open on gold. Or they break out, pull back, and they stay in a trading range. So that first 15 to 30 minutes, if it makes a high and a low in that first hour, now we got the market in a trading range. The equity market now opens, and at some point may explode to one of the extremes, to the high or low of the session. So again, people will say, well, you're calling the swing high the high of the day or the low of the day. When you are in a new session, you should be able to define the high of the day and the low of the day. If there are swing levels there, the stop hunt may end at that swing level from Asia or from New York or wherever that may be. The important part to understand is that if that's a swing level within a previous session, that is the most recent low level where stops are at and where money is. So if there's a profitable trader in that position, the whole purpose of the market coming down there is to either get them out of break even, or if we have a market. So it's important to understand that that first hour often lays the foundation for that middle hour. And in Asia, we could have a market that's already breaking out. You may have, they may have, in that first 2 hours of the day, for example, in gold, they could go up, they could go down, and break out of a geometrical structure before they even get into the market first hour. But if we're above 50 or on top of a double zero and we come into the open, I'm expecting this market to give me something off of the round numbers, or to break down and work off the numbers, or again come down to 25 in that first hour, make a low, make a high, then continue the trend. Whenever you have that geometry in that first hour, now you are either at major round numbers, so that equity hour can now be a stop hunt in that first 15 minutes, or breakout pullback trend trade, whatever that may be. But a lot of traders see the market take off, or it's already in movement. They think they've missed the trade and I should have been trading in the gap time. Stacey doesn't know what he's talking about. there can be blow-off moves already in process or in that pre-market stop hunt that hour prior to the 12 candle window. Yes, but it's important to understand that if that market is now already moving and you head into the 12 candle window, that first hour, so if the market's going higher, that first hour will either extend it out, which means that now our equity hour is probably going to be putting in a high of the day, or it's going to come back into the trend and put a new low of the day in for a continuation trade. So a lot of traders see the market going higher into the open. They're looking for an engulfment. The market gives them an engulfment in the first candle of London, and then bang, it goes to a new high again. They say, well, that didn't work. The market is in process. It gives us a 1 bar pullback. That is not the high of the day. The high of the day will end up looking, as we've talked about before, either an extended M, it'll be an M formation, a shortened M, it could be a lower double top. Usually you'll see that lower double top in the first hour, then London opens or New York opens, takes it up higher. We could see an extended 3-peak pattern. But the important thing is the timing window. When the equity market opens, 9:30 New York, 4 a.m. for London. I know people say Tokyo opens at 7 and all that. Asia's slightly different. It sets the beginning boundaries for the day. It may be a trend trade, it may be a high and a low, it may just be in a box inside of the previous US session. Again, the US session gives us our boundaries as we head into the next day. So that first hour is really important because that tells us or gives us a bias. So we'll just get rid of our lines for a sec. Asia goes up and puts a high of the day in place, above double zeros. The market comes down to the quarter level, just like it did on gold yesterday. It had a low of the day down below double zeros. It creeps down, makes a low in the beginning of the first hour, comes down again in London and pulls back. It's working the low, working the low, working low. We're looking for the reversal trade back to the high of the day, or we're looking for that to break down and pull back and roll over. So round numbers, major round numbers and highs and lows. If the market is creeping and that first hour gives us a low and a high of the day and the equity hour mark opens up and hits that, it either blows through it because it's a breakout for a trend trade, and again that comes back to our 15-minute charts, day 1, day 2, day 3. We'll go into more depth about that in the next couple of days. A lot of questions, can I go over the day 1, 2, 3 again? We've had 3 days down. They just went further again today. It's Friday. We had an inside bar on Monday. We could see possibly a reversal today, or we could see this month keep making new lows on gold. The pound is making new highs. Day 1, day 2, day 3, pulls back a day, reverses peak formation low for a 100 pip move up, consolidates on top of the numbers and trends, pulls back, bang, new highs yesterday. So we're going to look at the pound. That was textbook perfect yesterday. 3 bars, pin hammer, first hour, 3-bar reversal, and bang, 100 pips. A lot of traders messaged me right off the round numbers. That was a textbook perfect trade yesterday. And again, gold, basically inside bar for the most part, large part of the day, making 3 peaks over Asia, London, New York. A 1, 2, 3 at the beginning of the 12 candle window in New York before pulling back, consolidating into the equity open, stop hunt back into that peak and dropping down 75 pips or whatever it was. So, but that first hour, 15 to 30 minutes, you'll often have your high or your low unless they're working in one direction. If they're working in one direction, they're going to put one of those boundaries in place. If they're down low, they're most likely going to put a low in place. The equity hour can come back and retest that now. We're looking for a W. Or the equity hour will stop hunt high and roll over and continue that for a measured move. So again, 3 types of things that markets do, critical to understand. But that first hour, step back. If you're not sure what's going on, you don't have to worry about chasing it to the high or to the low, the breakout, whatever that is. If you miss a move from the inside, remind yourself, we want to work from the extremes. The stop hunt back will often be just as fast as the move from the inside. So if they whip it back and forth inside, wait. If it's a clean trending market, that's completely different. Trade with the trend. But if we're inside as we head into that 12 candle window or into the equity hour, let them show you their hand. They're either going to jam them in for a reversal, or they're going to hit the stops and reverse, or they're going to break out, pull back with a stop hunt into the trend and continue that move with the trend. So again, thank you for a ton of feedback. Let's look at the charts from yesterday. I tell myself this every single day. Two things. Am I at the high or the low? Is this going to be a trend trade or a reversal trade? Which again comes back to our 15-minute charts. And where are we at in the days of the week? Monday, Tuesday, Wednesday. Is this going to be a reversal day? Are we up high? Are we down low? Yeah, are we coming back against the trend? Is this a normal day or is it choppy? All those little things. And is this trade setup scalable? So when you get a little 3-bar reversal at the low of the day on round numbers, or the low of the Europe Open at round numbers, and you've got the high of the day 50 plus pips away, that's a scalable trade setup with a 1-bar stop, asymmetrical risk reward. Trend trades, same thing this morning in gold. Little false W before the session begins, jamming traders up into zeros, rolling it over, moving it down 75 pips. Simple things, continuing with the overall 15-minute trend. Keep it simple, stay disciplined, stay focused, keep getting better, and may the markets go with you.
Good day, traders. Stacey Burke from Stacey Burke Trading, continuing our discussion on the first hour. Looking at the British pound, the pound has been trending now for a few months. Not always easily tradable trend days or anything like that, but overall on a daily basis, we have been heading north for a while now. And the market, as we saw last Friday, gave us a beautiful reversal trade off the round numbers. So again, just darken these lines for people to see the major round numbers. Double zeros are the dark red line, and the hash line is the 50. Dotted lines inside are the quarter level. So we saw that Wednesday put the high of the week in place last week, and then an inside bar on Thursday creeping down. So again, pulling back. And then Friday we saw the trapping volume below between double zeros and 75 before the big explosive 50 pip move in the U.S. session. The market then layered on top of 50 into the open of the week and continued its move to the double zeros up top. So again, the market broke through zeros the previous week, pushed up into 50, comes down to zeros, traps volume below the quarter before resuming its trend. So again, the pound respects the numbers very well. And heading into Monday, Tuesday, so again, we've talked about initial balance before. Usually the first 2 days of the week will give us our trading range. It's our initial balance for the week that can give us a lot of information for potentially measured moves, the bias for the week, whatever that may be. But we have a high and a low in place. Typically one of those will hold for the week. It may just, as we see this week, they've come down and taken out the low of Monday, but it respects that 50 level as its extreme border on the bottom of the market. So as we headed into yesterday's session, again zooming in here, we can see that the market, again, pound, sometimes offers trades in Asia. I don't ever trade the pound in Asia, and I mentioned in an earlier video about only looking at the pound when it's at 50s or zeros. So we see the market creeping down around 50 yesterday. As we head into that first hour, we get our breakout pullback. So again, some people have asked me, well, I don't understand. We don't see an engulfment. Sometimes we see the two candles. You're right. But also understanding that this market, when it does a 2-bar reversal, are you at numbers? So not on top of the numbers. So if we were going long and we saw a 2-bar reversal at the numbers, that's a trap. We want to see the engulfment or the reversal penetrate the numbers and reverse. That's locking in that level. The next bar, which is the 3rd bar of the first hour. So now you've got this pin bar is now a pin on the 1 hour. So traders, when you can understand that and you've taken that at the low of the day, we'll look at the 1 minute chart and the difference on the pound versus gold on the 1 minute. but we have lower highs. Okay, so this is another telltale sign you're looking for as the day's evolving. They're working into 50, working down into 50, getting people to short this down low with lower highs. That's your first clue, lower highs, and then it goes into a consolidation sideways. Because these lower highs, and the market's not going any further lower, are the levels that this market, you want to see that because that's fuel. That's fuel inside of that 25 pip box for this market to move fast. If you didn't have that, then the market might break out, pull back, break out again, pull back. But when you've got these lower highs, the market has the ability now to go through these orders quickly and not only trigger stops, but trigger orders of traders who are going long on breakouts of these lower highs, which is why we expect to see these moves happen fast. But we see the 2-bar reversal, then the pin hammer. Now, this pin hammer is sitting on top of 50. So they've locked in 50, and then they've given you the pin hammer. So at any point in here, you've got 2 opportunities to enter the market on the 15-minute. Now, breakout traders are in on this bar. The next bar after the breakout traders is another pin hammer. So again, little subtle clues where you can have a 1-bar stop and where the market now, potentially, if we take our geometry and put our measuring tool on there. So for people who ask me about this measuring tool, this is just my fib tool. I've opened this up and just changed the numbers to 0s, 50s, and 100% expansions of the range. I don't use Fibonacci. I just use 100% expansions of these ranges. So we'll be looking for a minimum of 1 full expansion, but in a strong explosive move like this, you can pretty much assure you're going to get 2 expansions of the range. And again, once we break through a major round number level, as the session progresses and we're into the next 12 candle window, 1, 2, 3, 4, 1 hour up in that US session, 75 may be the upper boundary now. So there's no follow through, so 75 may be where this market puts its peak formation in. So coming back to the original foundation about what we're discussing, the first hour, that first hour will often put a high and low in place. So if we go back to our 1-minute chart, and again, I'm not the pound I don't find is as clear, but the same rules apply. So when I say that, you'll see the difference on the gold chart. The 1-minute chart is like looking at a 15-minute chart. But timing-wise, again, I talk about understanding the 15-minute bars, the 15-minute rotations, and understanding in your head. So the market comes off of 50 right off the bat. So this has got people shorting the market coming down at 50. They get to the most recent swing low, which is our low of the day. They break through 1, 2, and then 3 reversal at the low of the day. Now timing-wise, just mark this off. This lowest candle is at 9:15. We'll just mark that off. That lowest bear candle pin hammer is at 9:15, the very first bar of the next 15-minute candle engulfment at the low of the day. Now, do we know that that's going to come back inside? No, we don't. But understanding that they've just done a stop hunt, we're at major round numbers. This 1, 2, 3 reversal is a reversal pattern. Now, there are different ways to trade this. You could be all in down low. You could be in with a partial, go to break even. When it follows through, you could add a second position. And when they come back inside, which inevitably they will always do because nobody gets a free lunch, breakout pullback, continuation, again, you have another opportunity to enter the market. So once you've seen these enough and you've studied these charts enough, some people want to enter on the 15-minute chart, but you can see the difference between entering in down low. And again, it's understanding the timing. We don't just get in. We got an engulfment. It's the beginning of the next 15-minute candle. 1 bar down, 1 bar back. There's your engulfment. So when you understand that, coming back to, again, understanding what we're looking for, we already have a low in place from the U.S. session. Does it have to go all the way to the previous day's low to hit stops? No. these traders that are long on this pin hammer, that's a stop hunt getting them out of break even if they've already gone to break even. And shaking, maybe they're going to get out of the trade now. Maybe they're not going to hold on. Their risk is still the same as it was when they first got in. It's one bar. It comes back down. Creeping trend down. Creeping trend down. Creeping trends will end in one of two ways. They will blow off in the direction of the trend, or they will reverse on a squeeze for an explosive move in the opposite direction. So again, our overall trend has been up. We have a creeping trend down, and we also have day 1, day 2, and day 3 down, jamming into the peak formation low on Wednesday. 3 days, middle of the week. Again, this is just an example of where there's going to be subtle variations. It's not always going to be just buy with the trend. So creeping trend, jamming them in. 1 minute stop hunt down, 15 minutes down, little 3-bar engulfment reversal for the 15-minute reversal, then the pin hammer and the explosive move back up. Now coming back to the previous day, again, we're inside of the range. We're inside 50s and zeros. They worked up into double zeros for the move back down. Creeping trend down, harder to trade. But this coil working down into 50, lower highs, explosive reversal for a 100 pip move back plus in the other direction. You know, earlier in the week we talked about this, the day 0. We had the range of Friday's high and low. We had an inside bar. The inside bar will often either be a reversal imminent for a reversal day or a continuation day. Now again, looking at the peak formations, they locked in the high, they've locked in the low. They did the same thing on Friday. So we're inside of the peak formation high and low. We go into a day 0 situation. The market breaks a swing high in Asia on Tuesday, but pulls back inside. They work it up. We have our double M formation before engulfing in our London US gap time, and then coming down, breaking the low of Monday for a big move down. So day 1 down, day 2 down. So breaking the previous day's low and then pulling back 50 pips into traders who are potentially short before continuing that move down. Creeping trend down in London, 75 pip stop hunt into the US session. Our bias is down. We're looking for a continuation trade. The first hour in each session. So if we zoom in and just look at the first hour, again, Asia a little bit different, but we can see same pattern right here that we just saw in the British pound. 2-bar engulfment, reversal, pin hammer, right at the beginning of the 12 candle window. We're long, double zeros. They've come down, they've triggered yesterday's low, they've jammed people in underneath yesterday's low, reversed, engulfed for a 50 pip move back up against traders who are in the market early. We head into our Europe-London 12 candle window. We have our engulfment in Asia, locking in a potential high of the session and maybe of the day. The market comes up 1, 2, 3 in the gap time just as our 12 candle window is about to open. The market immediately reverses and hits stops. So again, we're in the first hour of the Europe-London 12 candle window. They pull back, inside bar for a 50 pip move down at the open of London. So again, the market in that first hour makes a high, makes a low, inside bar, and continues the move in the London Open. Now we'll look at the 1 minute charts in a second. 50 pips into the open. So it's having your process, again, round numbers, the timing window, having your bias in place, the days of the week. What is my bias heading into this session? What am I expecting? If it's a down day, could we get they could take me into the down move first and then reverse against me for the stop hunt and then continue the move? Or could they go against me for 30 to 45 minutes before reversing, pulling back, and then in the equity markets continuing that move? Equity market pulls back, creeper down, pin hammer at 50. and they initiate the grind of 75 pips back up to the high of the Europe session. So again, people say high of the day, low of the day. Well, there's the high of the London session, the Europe-London window. It's still underneath the Asian high. We're up at the high of the day. It doesn't have to be through the high of the day. We're at the high of the day before we get the big engulfment reversal into the U.S. session 12 candle window, taking out the London low. So again, our first hour now has already run away without us if we're not in this trade. What are we thinking? Well, they're in process. We're expecting them to put a low of the day in place. They're going down. So at some point, we're going to see a low of the day. They engulf heading into our second candle of the middle hour. Just as the equity hour opens, again, the equity hour stop hunts back up into the trade to 50 before reversing with the inside bar. Just not quite a full inside bar, but the reversal with the original breakout. And where did the breakout come to? The pullback came right back to the breakout for the continuation down. So again, on our 1 minute charts, this is a bit clearer. But it's understanding, we want to know, are we in a trend trade, a reversal trade? We're not going to miss out. The market will give us a high and a low. So sometimes you see a huge move like this, and you think, I should have been in that. I should have been in that. Remind yourself of the timing window. Remind yourself that the equity markets will often do a stop hunt, reversal, continuation trade, whether that's a break to the high or to the low, whether it's extending the move even lower and then reversing. But if that equity market hour, that middle hour, has not traded yet, you haven't missed a thing. Sure, there might be 150 pips here, but there's still going to be maybe 50 or 100 pips somewhere else. So that first hour will give us a high and a low. We head into the Asian window. We have a grinding channel as we head into the window. And again, just respecting the fact that look for your 100 pip boxes. Look for your 100 pip boxes. Did the market break through a 100 pip box? Did it struggle to go past 25 pips? 25 pips on top of a 00 box, a false break. Before reversing, pulls down 50 pips, creeper back up. Halfway into the 100 pip box before resuming down, it finds support at the 00s. They work it back down into the low of the day before resuming that move back up. It takes out the lowest swing high. Now we're making new highs. Market breaks out in the first hour, takes out the middle structure, the other swing high. So we have stops above the U.S. equity hour. The market pulls back at 0. Getting traders, hitting stops on traders that were chasing this into the open. Engulfs, pulls back, and then reverses. There's our little 15-minute W heading into the Asian window for a move up to 50s. Hitting the stops on the U.S. session highs. So again, understanding that stops will get hit. So we're, instead of following through, we're in a downward market, but the market's now making new highs. Okay, so we're making new highs. In a downtrend, the market gives us a creeping trend. Just get rid of those dots. Creeper down. We're inside now. I talked about avoiding this stuff inside. We want to work from the high and from the low. Creeper down. Inside, still floating at median price at 25. Our first hour gives us an engulfment pin hammer. We're at the quarter level. That's not where we trade. We trade at the 00s and 50s. This is an example of where traders get caught chasing a move in the middle of a box. We want to be buying down low or selling up high. The market comes down into our London Open. Bear pin hammer hitting the stops. This is on our 15-minute chart now. Okay, but again, I just got done saying we don't trade inside of the box. We want to see this thing be down low at the numbers. But our next candle engulfs at the quarter level. Our second candle of the equity hour in London, a 2-bar reversal in the equity hour is a confirmation of a trade. So traders who are, we'll look at the 1 minute, traders who are entering in on this, okay, you can still expect that a bullpen hammer. This is the stop hunt on traders that have got the trade in the right direction. And on a 1 minute chart, again, we'll look at an example yesterday. We've got the 3-bar reversal at the low of the day for 25 straight up right off the bat, and then they pull it back and gave us a nice little W inside of that structure, which is a stop hunt back against traders who are in the right move off the low of the day for a 50 pip move through the high of the day. So just to emphasize a couple of things. This isn't hindsight trading. I am specifically talking about understanding the timing window, understanding the numbers, understanding being at the high and low of the day. The same thing is going to happen today. It's going to be a different variation, but it's going to happen when London opens. It's going to happen when New York opens. It's going to happen at the high and the low of the day, and it's going to happen at round numbers. So you're going to get engulfments. You're going to get pin hammers. It's the same thing. The market goes up, hits the stops, pulls back inside. Okay, we've hit the stops at the high and the low of the day. Now it's back inside again. Our median price is 50. We're in a 100 pip box. We want to be looking for something up high or something down low. 1, 2, 3, pin hammer to the high. On the 1 minute, it was a 1, 2, 3 right in the open. They pull it back inside. Traders chase this engulfment long. We're inside. The stop hunt was to the high of the day before reversing and engulfing for our M structure. And again, you can see the stop hunt into traders, 25 pip stop hunt into traders at 50, who are short the market on the 15-minute bar before dropping down 100 pips to the low of the previous day. So again, our bias, we are in a downward week. So traders who are buying this candle, this engulfment long, are buying long into a downward trend. So let's just scrunch this up. Let's go back. We said inside bar on Monday, day 1, day 2, Thursday's day 3. Day 3 down. We're still inside of Friday's range. We're inside of the peak formation high from Wednesday. Okay? We're from Wednesday, and it's Thursday. So three pushes against the downward move before dropping, consolidating. We had a squeeze this morning and a blow off through yesterday's low. And again, it's possible this may be a peak formation low for the day. Possibly, we'll find out as the day evolves. Without looking at the daily, there were stops below 50 here from December's monthly low. I believe it was December's monthly low. November's low. So it is possible we could see a 3-bar reversal by the time this day is over, taking out yesterday's high, or we could see this market continue to drop through and continue to make new lows for the month of February. The point I'm emphasizing today is the first hour is critical. So again, even looking at last night's first hour, we had a stop hunt to the high, pulls back, goes into consolidation. Traders chase this long on the engulfment, but we've already had our stop hunt to the high, and we're inside of the high of the day, and we're in a downward market before getting trapped in our first candle of the second hour. The equity hour is the pin stop hunt to the high of the day for a 100 pip move back down through the previous day's low. When we look at our 1 minute chart on gold, again, just today we're talking about the first hour. It doesn't matter. Every day is going to be different. So we'll look at the last few days. We have that channel coming up into the open from Asia. We're between 50 and 0. The market breaks the zeros. At the open, it breaks through 0 before engulfing. So again, first bar, traders are shorting this. They hit stops on traders who go long right off the bat before reversing right away and engulf back up inside of the zeros. We have our high of the day, and again, 15 to 30 minutes. The market moves up 25 pips. Now we're above 0. We're in the next 0 to 50 pip box. It engulfs on the first candle of the second 15-minute bar before dropping down. So we've gone up to 25 pips, put a peak formation high in. Now this higher low is important because, again, that's an area where once this market breaks that higher low, you could be going to break even. We got a 4-bar reversal up top. This is trapped volume now. Another telltale sign, all these people going long expecting it to go to 50. 1 bar puts the death knell on those traders, dropping down, and then it just creeps down, continuing to move not only through the low of the open, but down just above the quarter level at 75 before engulfing. So again, 30 to 40 minutes. Okay, we're down now, starting the 3rd candle. We get our big reversal. Market creeps back up to zeros, and the 2nd hour opens up with an M structure. So again, at zeros, the market breaks down inside of a peak formation. So a little common concept, never counter trend the peak formation. So whatever most recent peak formation has formed, do not counter trend. So if the market gives us a peak formation and you're short, and the market continues to move, unless there's a new peak formation reversal that occurs, we do not want to counter trend the peak formation. The market gives us a peak formation high and the market jams in, doesn't go anywhere before reversing. So again, it engulfs and reverses for a peak formation inside of the peak formation. Just draw that short, and again, we're below zero. So the concept of trapping traders below zero before locking in that level. There's our W. Now we have structure. Okay, we're going to measure this high-low structure. Okay, we're looking for major round numbers or at least 2 full expansions of that range. We get both. Market goes up to 50 for 50, 0 to 50. And also our second full expansion is just above that 50 pip area. So first hour gives us a high and a low. Sometimes it'll blow off and go 50 pips, but when it does, and we're into that fourth 15-minute candle, chances are now we're going to get either a 25 pip move back, they're putting a high of the day in place, or they're going to pull back and continue that move at the beginning of the next hour. So first hour gives us a high. First it gave us a low, gave us a high, comes down and gives us a low. Works back into the low before trending. Expand the range, trend the market. Market goes into consolidation inside the peak formation high. We're inside of 50s and zeros. This is the dead time. You want to avoid this. This is the sort of garbage that's going to chop you up and spit you out before. We'll just zoom in here. Again, we have our low and our high, but we also have areas of swing lows inside of this move back up. So the creeping trend clears out that higher level swing lows. The first hour goes up, gives us a swing high, gives us a swing low, and then breaks out, hits the stops, goes to round numbers. Okay, we'll zoom in on this. Goes down to round numbers and gives us a W structure. Works into double zeros, gives us our W. And again, I want to just point a couple of things out here. Sits on top of the numbers, works into the numbers. Now this engulfment occurs in the third 15-minute candle. 30 to 45 minutes, 15-minute high-low, breaks out, does the stop hunt, works into double zeros, works into double zeros, works into double zeros, a third push, engulfment. Look how fast that move is. 25 pips straight up. Now the equity hour has not opened yet. London market has not opened yet, but we have our low of the day structure in place, and we have a high of the day structure in place. It pulls back inside. Okay, 25 pips fast. But London hasn't opened yet. London opens up, comes down 1-2, pulls back with an engulfment, gets traders going long. And again, remember, notice we're getting filled away from the numbers. Comes up, hits stops, and then bang, hits the low of the Europe session. So we want to be working the low of the day or the high of the day. The market comes back down and hits the low of the day, the Europe day. And Europe's hit the stops, the swing stops. We're at double zeros. We have a 1, 2, 3 pin hammer engulfment reversal. Bang, 25 pips straight through these lower highs. Creeper down, reversal. 4-bar reversal, micro W, and again fast 50 pips straight up through the high of the day at Asia. Again, we drew our high of the day in place, and we're in our 50 pip box, but now we've blown through that high of the day. So we're either going to double zeros or 75. We get up to 75, just past 75, and what do we get? We get a pin hammer engulfment. Okay, so the market goes up now, puts a high of the day in place, and what does it do? Proceeds to go back up to the high of the day, engulfs. So this is the fast 50 pip move off the market opens, 25 and 50. There's 25 down. Market locks in the high again before giving us a creeping trend between 50 and 75. So one push, two push, and then the 33 creeper into 75 before dropping down. And understanding the death candle, when we get this death candle, this last big candle down before it fades away, locks in all this trap volume, all these longs. If we draw this across on that third leg between 50 and 75, all these longs are trapped now, and it's going to fall fast and go back and hit stops on traders that are long off the open. So remember, you haven't missed out on anything. There's always going to be a trade. First hour gave us a high and a low. Market came inside before at the equity hour, hitting the stops, round numbers, engulfment pin hammer. Fast 25 pip move through these lower highs, creeping down, getting traders to short the market into the original peak formation low before engulfing, and then the fast 50 pip plus stop to the high of the Asian day. So again, we redraw our highs and lows. Come back later, we get our creeping trend inside, creeper up to 50 before stop hunt in the gap time. Just before our 12 candle window into double zeros, one push and then a 1, 2, 3. Get an engulfment pin hammer off of double zeros for a 75 pip move, 50 initially, and then a 1, 2, 3 pin to the high engulfment at 75. A 1, 2, 3 engulfment in that first 15 minutes to the high of the day. First place it comes back to is where the move started, hitting stops. Again, on that first move, I'm always looking for 25 pips, and then I'll look for the second trade. I lock in the 25 right off the bat on a very first move that'll always pull back into the trader who's got it right. Creeper down towards the end of that hour now, 15 minutes up, 15, 30 to 45 minutes, putting in a low of the day. So again, first for 15 minutes puts the high of the day in place. By our third candle, we now have a low of the day in place. As the next hour opens, it's a stop hunt inside on traders who have taken the original short trade before giving us the inside bar, dropping down. Again, the death candle, big candle trapping traders who chase that move up for a fast stop hunt down through the low of the day. Stop hunt high, fade. Stop hunt high, fade. And we're still not into the equity hour, but we have a low and we have a high. Market's making new lows. What does that tell us? Pulls back again before we head into the open for the New York market. We get a 1, 2, 3. First bar of the New York market down, and then a reversal, pin hammer, stop hunt high back inside of traders who've got the original short trade right. So market opens down and then stop hunts high, and what do we get? A 3-bar engulfment reversal off of 50. Stop hunt high, vertical move into the original downward move. Creeper down, stop hunt high to resume the original trend down. So timing, just pay attention to the clock. Have they done a stop hunt already? Where's my bias? They've hit the stops up top. Creeper down, stop hunt high, drop. Stop hunt high, drop. New York's open now. This market could continue to fade. It breaks through double zeros. Now we're thinking 0 to 50. 50 pips in what? 1, 2, 3, 4, 5, 6, 7, 8 minutes. Drops down, consolidates at 50, continues to fall through to the double zeros before finding support and engulfing and pulling back and going into consolidation off the zeros. One more for today just to show. Again, it stays inside of the 100 pip box. This is classic this morning. Market goes sideways above 50 before breaking down and going sideways, dropping down 50 pips, working off zeros, 1, 2, 3 to 25 before dropping down below zeros, triggering yesterday's low. Again, we're in the pre-12 candle window, so we're down below zero now. Now I'm thinking stop hunt into zeros for a move down. We've come down below zeros. They give us our W structure. This is forcing traders to trade into the numbers. You're trading into zeros. Double zeros, major resistance. You're in a downward move. Market goes up 25 pips, works into zero right at the open of the 12 candle window, gives us our M structure for the continuation of the strong move down. In our downward moving market, breaks down super fast. First 15 minutes now, working down, gives us a low in place as the second 15-minute candle starts trading. They work into 50 before hitting the low again. So we're working the low. 15 to 30 minutes, working the low. Below the quarter level, pins on the bottom, engulfment before coming back up 50 pips into the lower highs. The market now has broken above 50, worked back down into it, working up into 75, consolidating, breaking above 75 into double zeros, working into zero, working into zero, still below zeros. If we break above zeros, we could see this market continue. As I said, this could be possibly a reversal day, engulfing yesterday's high for possibly maybe even a reversal, a low of the month, or we fail off the zeros, roll over, and retest the low of the day. So again, double zeros, timing window, first hour puts a low of the day in place, runaway trend gives us our W structure for the 50 pip plus stop hunt back through the lower highs, find support at 50, working its way back up into double zeros. That first hour will give us a high and a low. Second hour, if it's not already moved, will now either retest and stop hunt, especially in London and New York. So hopefully you got some value from today's video, traders. Keep it simple, stay disciplined, stay focused, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.